Hello everyone, good morning. Welcome to today's MMR. Can you please hear me loud and clear? Am I audible enough? If I am. You can just type the word yes, and then we can go on. Right? Are we here? Are we together? Am I clear enough? Can you hear me clearly? All right. Okay. So we can. So welcome to today's MMR. My name is Jeremiah. Then be together for the next few. All right. So let's let's kick off. The first thing we'll start with, of course, is start from fundamentals. Let's go to the fundamentals. Into the pre-planned news, which is forex market. So for today, we don't have any other news apart from 12:50 p.m. That of Switzerland franc, the chairman of the Swiss National Bank, Switzerland National Bank. So for pre-planned news, we don't have any. However, there's another type of news that is not on Forex Patry and that you should also be aware of because of those of us who trade majorly currency about the Japanese government. As you can see, the Japanese prime minister stepping down. This will be their third prime minister in the past 5 years. So the new one will be coming in soon after the election, and then we will come to policies as well. So we'll see how the Japanese will react to all of this, right? So we have Switzerland franc usually as what will be out for today. Now we can go over to the chart cards, other side of analysis, which is the technical. I have to pay attention to technicals to see how we can from the technical. Right. Let me go back to my MT5, give us those analysis. Okay. Yeah. So presently on the MT5. MT5. So, of course, I'm going to start first with the currency. Let me just start first with the currency, and then I'll move over to the commodities and the indices, right? So, the analysis do we have for today? I'm presently on the chart of USD CAD. Okay, this was previous analysis on it. So now we need new type of analysis as every day the market tends to be new um, opportunity on the market to do new analysis and reposition for new setups, right? So let's start first with this currency, US CAD, USD Canadian dollar. That's the first currency I started with. So presently on the chart of USD Canadian dollar, short time frame perspective, meaning as a day trader. If you're trading from the perspective of a day trader, this is how we'll be analyzing the market. You can see this unusual candle here was caused by a fundamental move. Then we can see price has created a support zone around here, right? So those of us who have been following us for a while, we know that we have rules that we follow to buy and sell for any case scenario. Because ultimately, what we are doing is what another word for what we are doing is called scenario planning. So we plan a scenario that this is how we expect the market to play out. If it doesn't play out exactly how we want it to play out, there's no real need to move ahead with the trade. But once it play out in the way we expect it to, then we go on and trade. So how do we analyze this present USD card? From a short-term perspective, this is a support level. Now, there are both buy and sell zones on this chart. Where is the buy zone here? So remember that if you want to get a buy trade while the market is seemingly moving to a support zone, just use a buy stop of the last lower high. That's all. Okay. This will be our buy area. And in this will be our buy area here. That will be our buy area, just above the last lower high of the move down to that support level. That will be our last lower buy area. Okay. So I believe everybody can see my chart, Abby. Stop sharing once again and we share again. Yes. So I'm sure everybody now can see my chart. So right now I'm talking about the USD card. Okay. So we can see my chart. All right. Thank you. Okay. So this will be the buy area for USD card. Because like I said that what we are doing majorly is what is called scenario planning. So anytime price is moving to a support level, of course, it will get to a support level with a seemingly downtrend move. Just plan to buy above the last lower high. See it. Following that rule, this is where we begin to buy from. So, in essence, once we see that price is beginning to go into this area like this, yeah, then we can jump in on the buy. Yes, going for a buy. Now, the sell area as well on this same chart, in line with our scenario planning, is just below the support. The sell area, yeah, just below this support. So for the sell area, price has to go below here, then and go in for a sell. Right? So whichever one price, you know, chooses to go in first. For those of us who know how to use the pending order properly, this buy area deserves a buy stop. The sell area deserves a sell stop. So price will eventually choose to go in one direction eventually. Either it goes above here or it goes below here. It's going to eventually choose one direction. Then you can begin to trade from there. Begin to trade off from there. All right. So that's for the USD card. Let's look at two more USD pairs and then we move on. So the next one now is US British pounds USD. So the US dollar, the US dollar index itself has been going down, meaning it has been weak for some time now. But most importantly, is now approaching some very important areas or zones. So, for example, if I go to the higher time frame and I show us the daily time frame, clearly this level here is a very important resistance level for the British pounds USD, right? See, because until price goes above there, then price is still going to be considered as a downtrend. You can't say price an uptrend already until it goes above the previous lower high. That is the area where it is right now. So buyers would not, it's not it's not advisable for buyers to buy into this area anymore. It's not because it's already in the resistance area. So we are going to expect either a break of structure or a change of character. Let me explain that very fast for us to see what we're going to do for British pounds USD. For break of structure, we're going to see price go above that resistance clearly, convincingly. That's just what we want to see. And then we can now have a retest and then begin to buy. So once we see a break, one, and a retest according to our scenario planning, and then begin to buy. See, that is the plan for buy. However, the change of character, because it's already in a resistant area, the change of character is going to look like something like this. We're going to have what we call how price is going to break the last higher low. So this is on the H1 time frame. You can easily see the change of character of the H4 time frame on the M15. So let me show you how it will look like on the M15. So the last higher low, the M15. See, presently now this is the last higher low. So uh, theoretically, what I mean is once price starts to create higher highs and higher lows like this, then this is another new higher high. The moment we notice that the higher high that created, the higher low that created higher high, price goes below it, meaning this level here. Once we see that price has gone below the last higher low that created higher high, that is what we call change of character, meaning price is now moving from an uptrend to a downtrend. So for those of us who understand how this logic works, in order for us to sell, we're looking at price to change from, meaning it has to take out this last higher low. All right. So once price begin to take out higher lows, uh, majorly from the 15 minutes time frame, then we can begin to position for ourselves. So once we see something like this happen, yeah, it's now time to begin to sell from here. Because we expect it to now, give us something like this. So this would be the plan for a sell trade for British pounds USD. This has to happen first for us to begin to sell, right? And then for us to buy, we can't buy right now because it is in a very important resistance level. So it's not wise to buy now. We can only buy if it's able to break above that level. Or once it breaks above the level, then we can buy. But right now, we shouldn't buy. So this logic can also work for the much lower time frame for those of us who scalp or day trade. For example, I give us another example again on USD JPY. So we look at USD JPY. Um, this is the support level for USD JPY H1. See, so it is wide range consolidation. And remember, for a wide range consolidation, you sell above, you buy below. Now, this is the 1 hour time frame. If the 1 hour time frame is shifting from a downtrend to an uptrend at support, in order to see the break or the change of character, we just need to switch to the M5. From the 1 hour, we'll switch to the M5, and then we'll see what builds up like an uptrend. And then simply begin to follow it. It's as simple as that. So because we've seen that H1 is presently at support, in order for H1 to shift bullish and continue to go higher, it must now begin to break levels on the M5, and then we can now begin to scale in into our position. So the graphical representation of that, it's going to look like this. This is the graphical representation. It's going to look like this, lower low, and then lower high, and then another lower low, then lower high. So once price takes out a lower high, then so this lower high here now, this lower here high here now, price just have to go above it. So once price goes above a lower high, that is a clear sign of a shift, change of character from a downtrend to an uptrend. You see the pullbacks, and then price should continue to move higher. So that's clearly what should happen on the lower time frame, like on M5 if H1 is at support, on M15 if H4 is at support. Right? So that in mind, that's how we'll be approaching the USD JPY. Because it's at support, we expect this to happen on the time frame like the M5, and then now begin to scaling on our buy positions, on the USD JPY. So lastly, let me look at the Euro USD and forensic test. So higher time frame first, and then we'll scale down to the lower time frame. So Euro US is approaching this very important resistance area. This is the resistance area that's tested right now. So for buy position, it is not wise to buy into the resistance area as it is clearly testing the resistance right now. So you don't want to buy. For us to buy, clearly we must see this happen. Every chart is the same. We must see a break above the resistance. A break above the resistance is a more confident area to begin to buy from. See, and then we can now begin to buy clearly. That is how we're entering a buy on Euro USD. However, because it's at resistance, and if we expect to see a sell, for those of us who are planning for a sell, what should we see before we sell? So, see, I'm on the H1 time frame and easily move to the M5 and begin to expect what is called a change of character. So, the last higher low, yeah, see, this is the last higher low that created the last higher high. This one here, the last higher low that created the last higher high. So I need to see a break below it, which has happened already. And then I now need to see a pullback. See, it's happened already as well. And then I can begin to scale in on my sell, begin to sell from here, and then use the top level here as my SL. And target a 1:2 because it's just switching direction from the resistance level. From the resistance level. So it is still highly anticipated for me to begin to scale in onto my sell positions from there. All right, so that's how I'll be approaching the Euro USD. So I'll be looking at the chart to look at our request while I'm also moving on with our analysis. So let's move over to, I can see request for Euro card, right? So this were some of the scenario planning we did last time. Said price has broken this trend line. You see that we now needed to pull back to this level to buy from here, stop loss here, and then we target ratio TP1, TP2, and then it has moved all the way to TP3. So let's get rid of all of this and start all over again. So higher time frame, daily time frame first, just to check for where is price at. Price is in a very strong uptrend. Let me go a little bit higher because I'm just trying to look for the resistance level, the next possible resistance level. Price has gone above the last resistance level on the weekly and daily time frame. So we're in a strong bullish market, swing trade from the higher time frame. So this is simple to trade because we're in a strong bullish trend. Any form of pullback on the higher time frame, you create a downtrend on the lower time frame, and then we can now scale in on long-term buy. So the long-term trend for Euro card is a buy because it's bullish. It's very much bullish. So due to that reason, I would only be thinking in perspective of buy. How do I enter a buy if price hasn't created a higher low? Simply put, my buy stop above the higher high. It's simple. So what I mean is I need price to give me a higher low so that my risk will be minimal before I'll be able to buy. See? Before I'll be able to buy here. So once price gives me a pullback, I can then buy. So meaning this higher high should give me a higher low for me to buy. Then I'll buy. Now, if price is yet to give a higher low, meaning I can only find a higher high there, and then the pullback is just small or just starting, just like what we are seeing, and I still want to join the buy, what I need to do is to go above that higher high is to simply go above the higher high and insert my buy stop there. So for EuroCAD, this is where my buy stop will be. Buy stop will be there, and my stop loss here, then I can target a 1:1. Then target a 1:1. Now, another more precise entry to wait for is to target this demand area. This is a very strong demand area. If price is able to pull back into this area, it makes the probability moving higher up very, very high. Just imagine price is able to pull back into this demand area. That would be a very good sweet spot for us to get a good long-term trade buy on EuroCAD. But EuroCAD is a bullish market, so we should only be thinking in perspective of joining the bullish move alone. So that would be my bias on the EuroCAD. Right. So let's move on to another pair again that we're also looking at. British pounds, New Zealand dollar. British pounds, New Zealand dollar is also giving us a very fantastic opportunity on the chart. Just like what I'm painting out for us on the EuroCAD, the British pounds NZD has done that already. So there's high chance of us seeing a very fantastic move on that chart. So I'll show it to us. So from the higher time frame, this is the daily time frame right now. We're bullish on British pounds, New Zealand dollar. You can see price has taken out this level of previous resistance. This is what I'm talking about. Yeah, this used to be resistance that's broken. It has retest, and then we're testing that area. So if I scale down to the H4 time frame, so we can see that accumulation phase is going on right now. So accumulation does not only mean reversal; it can also mean continuation. Another word for accumulation is close range consolidation. So price gets to a resistance and then it starts to a support and it starts to consolidate. Either support or resistance, they are all the same. So how do we position for this trade? Now remember that this was the previous higher low. This level here was the previous higher low. And for price to continue to go in an uptrend, it shouldn't take out the previous higher low created the last higher high. Price should not do that. So price is in an uptrend and then it's giving us just a pullback and then it goes again to an uptrend. You see this last higher low that created higher high. This last higher low that created higher high. No matter how low price is coming, price should not go below it. That's what has to happen for us to know that price is still moving in an uptrend, right? So once price is here, those are really optimal areas to get in on a trade because they tend to have a very good risk to reward. So imagine we're entering a buy from up here. If we have our buy stop here, just above the consolidation. I'm not saying we should necessarily jump in on the buy right now. We can just have our buy stop above here, and then our stop, if our risk is just below here, we can target. We're going to be very patient. We target as high as here. That's already like a 1:3. We can have like 3 levels of take profit. So we can first start from a 1:1. Price moves to our 1:1. We move the TP higher to a 1:2. Price gets to a 1:2 and still moving in an uptrend. and then target. For British pounds, NZD, this would be a buy area. This would be a very fantastic buy area to target. That would be a very, very fantastic buy area to target for a buy. Then here will be a fantastic area to target for the stop loss and go for take profit. All right. So that's how we'll be approaching the British pounds, New Zealand dollar. That's how we're approaching the British pounds, New Zealand dollar. All right. So let me take one more currency and then we'll move over to the commodities. Let me look at one JPY pair. So majorly what JPY is doing, I've actually touched on the USD JPY. So for pairs like GBP JPY and Euro JPY, we are seeing more of consolidation inside that market. So we just want to mark out the consolidation and then what's it called? Buy low and sell high. You can see this is still some of the analysis from last week. We only just want to buy low and sell high. So that's it for the JPY. Pending the time that we would have clearer direction on the JPY. And anytime we have a more clearer direction on the JPY, we just want to keep it as simple as this, right? So let's move to the commodities market. The commodities. How do we approach the commodity market? Right. So to trade the commodity market, we start from gold. Gold simply creating new higher highs, higher highs. So it's a little bit tricky for clients with some meager capital. You know? They're asking that at what point will you do the pullback so that I can jump on the buy? The only thing you can afford right now is patience. Okay? You just have to be patient for it to give the pullback and then you can jump on the buy because it's clear when everything else is panicking, people want to put their money where it's very, very stable. So a lot of money is going into the gold market to stay as investment, as portfolio security, and all that is pushing the price of gold higher. Now, you need to understand that no matter how high price has gone, front of us, it can still go higher. Once it has gone high, doesn't mean it cannot still go higher. There are still very much areas to cover. This is just 3,600. There are still prices like 4,000, 5,000, 6,000 thereabouts. You know, so price can go higher and higher. Yeah, you can have a bull run for years, consecutively years. So we should be clear about what we are seeing on gold. Doesn't mean that because it has been going on for a while now, it's most likely going to change direction very, very soon. That cannot be true all the time. All right. So we are in a bull run market for gold. More of the time, you should be thinking a line of buy, a line of buy. So if price is moving in an uptrend and you want to jump on the buy, you just need it to do a small type of, you have like 3 ways to join the buy once the price is moving in an uptrend. That makes sense. That makes a lot of sense. So price is moving in an uptrend like this, and then it has created a new higher high, and we can now see seemingly pull back. There are 3 ways to jump on this buy, then you should be fine. So what are the 3 ways? The first one is, which deserves the lowest risk possible, that you can easily use a buy stop. Just put a buy stop above the higher high. So target, the continuation of the uptrend. As simple as that. Just put a buy stop above the higher high to target the continuation of the buy. Or just wait for price to get to the middle range and then you can have your buy limit here. And have your buy limit here. that will be at the middle range of the move, or you can just have a buy limit at the demand area. These are the three most optimal ways to buy in an uptrend. So whichever one works fine is okay. But for gold, once you are using a buy stop above the higher high, just to continue to target the uptrend, the only clause it has is that there's something called false breakout. So price, can go up, hit on the buy, and then now begin to go. Okay, it's fine. It's part of what can possibly happen. It's not unusual. As long as it is not taking out the previous higher one, and as long as you have your stop loss below, you're fine. So by using buy stop to follow the higher high of gold is a very wise move. So all throughout all of this move now, you can see every time you're using buy stop to follow the higher high, it just continue to accumulate profit and profit and profit. So gold buy trade position for buy more of the time. All right. I'll look at some other commodity as well. I think I have a request for wheat. Let's look at wheat and then we now move to indices. We now move to the indices. Okay. So right now we're on the chart of wheat. So wheat start from the higher time frame with the knowledge of supply and demand. Use supply and demand majorly to trade wheat. So we're experiencing a major supply for wheat. We are in a strong downtrend. Yeah. I believe strongly that wheat should go lower than this. All of this is resolved around specialty. So we're in a strong down move from higher time frame, still down to lower time frame, in a strong down move. So losing the knowledge of supply and demand, should be thinking in terms of sell more of the time for wheat. And at what point can you sell if price go back to the supply area? Once price is in the supply area, then position for our sell around there. So the latest supply area is here. That is where we plan to sell from. So that area that we should plan to sell from. That's the area that will give us a more optimal entry. Right. So look at the chart and take more requests. Here I have the indices, US 30, and yeah, indices US 30, and coffee. I also find coffee. So before we go to the indices, let me just take coffee and, and move on. So coffee starts higher time frame bias first. So these are the type of foods that's so good. So coffee has resumed back the uptrend in a demand market for coffee. So we are seeing strong bullish move. So it's a no-brainer. You should be thinking of buys more the time. Thinking of buys more the time. As coffee is now in a very strong uptrend. So at what point should you buy? Simple. This is so simple to trade. A buy stops above the higher high or a buy limit at the demand area. Simple. Because it's already buying. When you're thinking in terms of buy, so just trade in line with the trend and trade what you see, what you think. So buy stops above this area here. It should be our buy stop area. And then for buy limit here. Buy limit here. Buy limit. Yeah. So that's how we're gonna approach the coffee market. Simple as this, right? So now let me take the indices market. The indices market. So I'll start first with the US 30. Let me go over to the US 30. Look at the chart of the US 30. So on the US 30, the index market, let's start from higher time frame perspective, uptrend, H4, uptrend, H1, uptrend. So let's get rid of all of this analysis previously. So presently on the chart of H1, we should be thinking bullish. Once we know the direction of the price, the places where we now tend to enter is the next most important thing to think about. The first thing is to first identify the direction of the market. Once we know the direction of the market, the next thing should now have a plan for where to enter from. As knowing the direction of the market is not enough, we should also have a plan for where to enter from. Because if we know the direction and we enter wrongly, we might commit what is called entry error. There are only three reasons why we can lose money on the market at any point in time. One of them is totally not in our control, and two is within our control. First one is market change, second one is entry error, and the third one is probability error. Now, committing probability errors when you are seeing an uptrend and you sell, that can be probability error. Entry error is you see an uptrend and you are not entering the buy properly. That's a sign of entry error. So, in order for us not to commit entry error on US 30, it's an uptrend. What are the most premium areas to enter the buy from? The previous higher low, which is the demand area, is where we should target to buy from, or we should plan to buy above the resistance or the higher high. So those are the logic we can use to trade this US 30 currently. This US 30 currently. So because it's an uptrend, it doesn't matter what we are thinking. Our thinking is not so important there. If price is an uptrend, it can still continue higher. Let's say you are buying on the US 30. You are buying on the US 30 and you're already in profit, but you still want to make more, and yet you don't want to lose what you already have. So wherever it is that you have bought from, let's say you bought from here, you can simply move your stops to break even. Simple. So let's say you bought from here. Say you bought from here. Yeah. You're able to buy from here. And then you had your stop loss here at the point in time and take profit here. And then price is still moving higher. Or let's assume that you don't have a take profit, but is in profit already. What you should just do is the stop loss that I said, just take it to break even. So just put your stop loss at break even, because regardless of what we think, price can still go higher. Or we can also do it like this, because it is now approaching the resistance area. So start buy, secure that profit first, and then use your buy stop above the resistance. And then use your buy stop above the resistance. So if we closing on our profits now, take some of those profits first, we can now be positioned again by using a buy stop above the higher high or a buy limit at the previous higher low, which is also the demand area. That's how I would approach it, sir. I believe you got that. So the same approach can be used for both the US 100 and the DE30 and the DE30. Right. So for D30, let me take out all of this, then start all over again. So the strong demand area is still down. We're having the strong demand area at the bottom down. Okay, I'm going to repeat it again. Those of us asking. So the strong demand area is down here. Yeah. And then price has come to test that area. To make the buy a little bit more clearer, because price is still respecting this trend line resistance, because this price is still respecting this trend line resistance, why don't you just wait for a break this level, and some type of pullback retest. Then we can begin to buy. Begin to buy. So because price is still respecting that um, support a resistance trend line, we can just wait for the break of that level, and then we can begin to scale in on a very fantastic buy opportunity on that chart. I believe we understand that clearly. Yeah. Once we do it that way, we'll get optimal positions on the DE30, right? So put a trend line like this and wait for a break and a retest, then we can begin to buy the DE30. Okay. So can you repeat 3 ways to commit entry error? So the entry error is just one part of the ways that we can enter the market wrongly. Yeah, anytime you lose money, like I said, anytime at all that you suffer a loss, there are only 3 reasons why we can suffer a loss at any point in time. The first one is what we call, number one, market change. First one is what we call market change. This one is, let's say, price is in an uptrend, and then you enter a buy after the pullback. For some reason, it goes below and it takes out the higher low. That is purely market change. It's totally not in your control. This, everyone trading will experience this from time to time. The deals we pay for trading. The second one is what I call entry error. Entry error. Entry error is when you have a clear way we enter a trend. So we can see an uptrend, but there's no pullback and we're jumping on the buy. That's an example of entry error. Or we can see a downtrend and then there's no pullback and we're jumping on the sell. That's another example of entry error. Or prices at support and you don't have any confirmation and you're jumping on the buy, you're committing entry error. Get that? And then the third one is probability error. Third one, number 3, is probability error. This one is when there is an uptrend and then you're selling, and there's a downtrend and then you're buying. Now you can commit probability error and still make money off it, but it doesn't make it less an error. It's still an error. Just that if price is moving in an uptrend and you sell, it means you are selling the pullback of the uptrend. We have to be aware so as to know how to close it on time. As simple as that. Another example for probability error is that you buy at resistance. When you buy at resistance, it's an example of probability error. You should only buy above a resistance after the retest of that resistance. That is when it becomes a support. So this number 2 and 3, entry error and probability error, are within our control. But number 1 is not within our control. Those are the only 3 ways you can lose money at any point. Anytime you lose money, it will be because of money. Right? So that's why it's always wise to have a plan before you come on the chart and then you trade your plan. Plan your trade and you trade your plan. So these are the simple ways where we can begin to position for our trade. So the person asking if they can close their trade on USD JPY right now. Yes, you can, because for a day trader or for a scalper, once you have made an average of 10 pips, you are good to go. And it has already moved like 28 pips at the moment, starting from where we bought from. Now, we can still make additional money on this again. Remember, I'm on the chart of USD JPY 5 minutes time frame for those of us who are day trading. If we remember what we said concerning, because these are just simple things to look out for every time on the chart, and you'd always be getting good entries. So I said that if price is going to move from a downtrend to an uptrend, it's already a plan even before I got on the chart. So if price is moving in a downtrend, the last lower high that created the last lower low, the last lower high that created the last lower low, which is going to be an area like this. Once price is able to go above it, once price is able to go above it, and then we'll see some form of pull back, then we can begin to buy massively. That way, we're going to get a more precise entry. So if we bring this theory down to what we are seeing on USD JPY or the 5 minutes time frame, day traders, you can close your buy trade or profit right now, but to get a second premium entry, then the last lower high, which is this area here, this is the last lower high that created the last lower low, in line with this theory. Let's just wait for price to go above. So once price goes above this area, it makes that trend change completely. Then you wait for a pullback, then you're good to go. You can begin to now scale in massively and buy trade. I think that's clear now. So let us begin to wind down and take off. All right. So to wrap up today, somebody is asking that I want you to please advise me on how to be patient when executing a trade. So patience and discipline are traits that you need to intentionally work on if you want to be consistently profitable in trading. Now, your strategy, let's assume that you have strategy, a good strategy. Your strategy, you need patience for it to play out. How do you develop patience? It's through discipline. How do you develop discipline? It's via patience. If they go hand in hand. Once you have a scenario planned out, you need to wait until the market plays out your scenario and then you will make money. Because a senior colleague of ours says that the money, that is the money or the profit in trading, the money in trading, the money in trading is in the waiting. Money in trading is in the waiting. So once you have a plan, like the one I have now, if this is what I'm expecting to happen for me to jump on the buy, I simply just have to wait for this to happen on this particular chart. Why I might be looking at others for me to jump on the buy. So it comes gradually, sir, but you have to be intentional about it. You have to be intentional about it. You have to be intentional. It takes an average of 21 to 35 days for your body and brain to begin to fully adapt to a new type of change because you can always relearn and unlearn. You have the ability to do that. Then, before you know it, you do. So intentionally, sir, begin to intentionally wait for your plan to play out on the chart before you begin to pitch, so as to have premium execution all the time. It's like you are hunting. You just go into the bush and you start shooting anyhow from anywhere. You're just going to waste bullets. You need to find a target and aim it properly. It's the same thing we do in trading, right? I believe that helped. I'm going to send you a private message to recommend some materials for you that will help you greatly. And please um, get this material. It will help you greatly. Yeah. So I'll send it to you, sir. And consume this, it will help you. All right. So thank you so much, everyone, for time together. Yeah. I'm sure we're going to see again some other time. Okay. Lastly, good morning, sir. Was sell of Euro card on the major resistance, which has price has break the month and price is drop broken. No, you shouldn't be surprised. You shouldn't be surprised. Price can decide to break a resistance. Anytime, anytime price break a resistance, it's telling you clearly that I'm not going down, I'm going up. You don't have to argue with the market. Just close up on your sell and follow the correct direction. Because a losing trade is actually showing you the right direction. When you sell at resistance and it breaks the resistance, it's telling you I want to continue to buy. We are the one that would easily adjust. The market does not adjust to what we want. We are the one that adjusts to what the market is doing. That's the way it works. So if I sell at resistance and price breaks the resistance, I'm simply going to close up on my sell or it hits the stop loss, and then I'll position for my buy. That's what it's telling me, that I'm not going down, I'm going up. So I just have to adjust. Yes, that's how to do it now, right? Okay. So I'll be seeing us again some other time. Again. Thank you so much. Thanks for your time.